and welcome to Big Deal. Now, Budget 2023 has many takeaways on the government's vision on several aspects like agriculture, farm credit, green push, healthcare, and more uniformity in taxation across asset classes. Now, all these, when digested by the investor community, really creates the roadmap for future investment decisions. So let me welcome on the show investors who will throw light on how the budget will really impact the investment scenario and the key themes that are picking up post the budget. Let me welcome on the show Anshu Kapoor, the President and Head of Investment Management at Nuvama Asset Management, Amit Chandra, the Chairman and MD India at Bain Capital, and Vineet Rai, the Founder and Chairman of Aavishkaar Group. Gentlemen, always a pleasure to speak to you and welcome to CNBC-TV18. Now, Amit, starting with you, what was the theme and the tenor and the vision of the government that you picked up from the budget? Also, getting into the election year, do you think it was populist and more visionary for a longer term than putting down details for just 1 year?
Thank you, Nisha. First of all, I think this surprised many people because it wasn't an election budget. In fact, the budget had a stimulus for taxpayers of all kinds, from the small taxpayer to the really large taxpayer. And I think that will have a positive impact in months to come. But importantly, that stimulus came with a sense of fiscal responsibility. And I think that's really valuable because everyone in the world is looking at India right now as an investment destination, and being fiscally responsible is important from a macroeconomic perspective. So I think that was a second key objective that in my mind was achieved. The third very important prong in my mind for this budget was the continued investment on CapEx, particularly the green transition and infrastructure, and taking that approach over the desire to keep giving out subsidies and doles, which you can always have done in an election year, and using that as a vision for building the India that we all want to see. So I think those three things to me really stood out and made this actually a very interesting budget in a year in which many people expected something very different.
Right. And a lot of time was also spent by the Finance Minister, Amit, on the green transition, sustainability push and the green push. Now, Vineet, coming to you on this particular aspect, we have had several chats. What does the budget really articulate in terms of future investments going forward and the key highlights and takeaways for you from this?
So, Nisha, I think my friend Amit has just covered the big person's picture. He runs a much larger fund. I run a very small fund. But I also come from the side of those who are really curious about the impact angle as well. From that perspective, this budget is very visionary from on many aspects. If you look at the green push, not only is the more very well articulated and fairly well known push towards green hydrogen, which actually is probably one of the more interesting outlay that the government has provided, with a significant production capacity to be in place. That I think is one big and very positive push towards green and sustainability. But I think the amount of announcements that we see between agriculture, micro, small, and medium enterprises, and the quantum, I think the whole technological base that needs to be created so that more agri-techs can actually service and create efficiencies. The push towards logistics to make it much more efficient, given that the kind of inefficiencies that we see in India, especially when we are going to be competing with the world. And then I think we are actually talking about startups, which the government acknowledges is one of its big success factor. There, I think, while the finance minister made a fairly significant recognition of the sector, I think the idea of extending the losses by 3 years was a very welcome one. But as investors, we are a little underwhelmed with some of the new additions. For example, in the fine print, there is a mention of the angel tax being extended to the international sector. And we would need to understand actually how would it impact the foreign flow of capital, especially for startups. We understand that there is an exemption in case you register with DPIIT with a Form 2 as a startup. But the Form 2 conditions are very onerous for the startups. And those challenges, and therefore not many have registered. We are very, very confident and very hopeful that a large number of startups will be flipping back to India. But the confusion that is being caused right now may actually throw a big spanner in this whole idea of bringing more back into India. And we may see a reverse flip. So I think overall the budget is wonderful. It actually is very visionary.
Yes.
I think Amit mentioned about the fiscal prudence that is very obvious. The 10 lakh crore being put forth. But the more interesting thing is to note that a large amount of that money is coming from, the increase that is coming from, which is roughly 33%, is from the reduction in subsidies, which actually shows the prudence at the level of government. So overall, extremely positive on the budget, slightly underwhelmed as an investor on the new challenges that we see in the 5G.
All right, and you also mentioned one of the clarifications required, but one of the points that you mentioned will be picked up again, Vineet. It calls for a deeper discussion. But let me first come to Anshu on the message that the market is getting and the impact on the various asset classes. As somebody who manages wealth, which asset classes are now looking more attractive after the budget impact?
Sure, Nisha. Maybe let's add the dimension from an investor's point of view. We've talked about startups and we talked about the macro perspective. See, there are two key messages for the investors in India. And mind you, investors in India, households in India save $700 billion a year. So there's a big pool of savings that will be influenced by the direction of this budget. Number one is the government is encouraging or nudging people to move to the new tax regime. Which means now henceforth, as you move to the new regime, you are not directed or influenced in your investing decisions by tax incentives. Right? That's a big pool of money. And we don't have data actually how much is influenced or not influenced. So there's a big pool of money that goes out of that bracket and therefore becomes available for bank deposits, for mutual funds, equities and other fixed income products maybe. So a lot of influence from investing behavior changing. Right? So the culture, the behavior changing, that is one message. The second message is harmonization of tax rates. So if you are investing in a savings or investment product, it could be under a different vehicle or a wrapper, but it should be treated similarly. I think that's the direction in which we are headed. Just to give you a sense, insurance, savings in insurance is about 50 trillion rupees. It's bigger than the mutual fund industry now. Right? And how much of it is influenced by these tax incentives or aberration in the tax rates, we don't know. But to some extent that has been plugged. But the direction is very clear that you're going towards harmonization. That is one instance.
So tax consideration should not be a factor in your investment destination and also your choice of asset class.
Absolutely.
That is the message coming out, even though the amount is very high of 5 lakh per year in terms of premium, but it's the messaging, and you think that this particular message will get even more pronounced in the future budget.
Absolutely.
That's
the
what
tone and the direction is very, very clear.
A direction has been set, even though it's a very small. See, very few people get covered in this bracket right now, and even if you have done 4+2, only your next 2 is going to be taxable. So that is the breakup at the moment. So the messaging is very clear that tax consideration should not be one of the defining factors for investment. Come back to you for some of the other changes also made. But Amit, let's raise this particular point that Vineet also had alluded to on the rural economy and the push. For an investor community, For an agrarian country like India, how much of a difference does that make, and what are the key takeaways when it comes to the farm credit as well as farmer welfare, credit offtake for farmers, as well as even looking after the food grain and our agriculture, agri-tech infrastructure? How is all this making sense in investment decision for the investors in this space?
Yeah, great question, Nisha. A lot of my work is actually outside of Bain Capital with farmers. And so one of my observations has been that over the past many, many years, a big part of our emphasis has actually been on, policies like MSP, Manrega, and other such approaches to support the agrarian sector and the rural economy. The shift that this government has tried to do over the last few years, and this budget actually lays it down even more, clearly, is to invest in building the infrastructure and the foundations for a more vibrant agrarian sector and hence rural economy. And I think that actually that formalization, in my mind, creates a more resilient sector, a sector which can unleash a lot more opportunities for youth, for investment opportunities for people, in urban areas as well. And let me talk about a few specific opportunities which the budget actually talks about. Everyone in the world has applauded the digital public goods that we created in the last 3 or 4 years, be it the financial goods, be it properties like Coven. And this budget actually talks about replicating that for the farm sector.
Yes.
Now, just imagine what potential that can unleash over the next couple of years once we do that. We know that the farm sector has suffered enormously because farmers are often forced to sell something when they really need to immediately, and lack of storage has costed them heavily in terms of both price and wastage. The budget talks about massively increasing the investment in storage capacity. We know that there is a big opportunity of converting the waste that exists in our rural economy into wealth. The budget talks about a 10,000 crore investment over 3 years from waste to wealth, which we know just that investment alone will create a multiplier in terms of opportunity for farmers. And importantly, that's a green investment, right? And then, 2 other things which I will just highlight, which in my mind could be transformative for the rural economy. The budget talks about setting up of 10,000 BRCs, bio-input resource centers, all over the country, which will facilitate about 10% of our farmers to move to natural farming. Now, natural farming is climate resilient farming. It improves income for farmers. It's great for consumers like all of us because it's pesticide and chemical free produce. It's great for the government because it helps cut fertilizer subsidy, and it's great for the planet. Now, by doing this, we are taking the lead globally in natural farming. And finally, one interesting thing the budget does, there was a lot of talk about making India the global hub for millets,
yes,
right? And I'm sure a lot of people are wondering why, but millets are actually a great super crop, right?
Yes.
It consumes a lot less water. It's great from a nutrition point of view. It's much better for, from a climate perspective. And if we find a way to increase its production so that farmers benefit from an income point of view, it's win, 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 win. So the budget takes a very imaginative, visionary approach towards how to fix agri issues which have existed for decades in a sustainable way, as opposed to simply keep relying on schemes like Manrega. I think I really like that approach.
Yes, very well pointed out, Amit. And I would just make one point that the budget has very well synchronized the green revolution that we are used to when it comes to farming in India and the green revolution that we are seeing around COVID times on sustainability. And it has really brought both these aspects together very beautifully. And some of that will really show results in coming times. But we'll slip into a short breather on Big Deal and lots more to talk about the investment decisions that are going to be defined by some of the budget impacts. Stay tuned for that. Welcome back. You're watching Big Deal, and we are here talking about the budget impact on the investments going forward. So Anshu, we spoke about the equity markets and the theme that is brewing there, but fixed income in an interest rate hardening scenario is going to take much more prominence going forward. Now, REITs and InvITs have taken a huge beating when a tax has been introduced on the debt repayment as well, which I believe a few listed REITs and InvITs have a huge component of in terms of their cash distribution and also market-linked debenture changes. How do you read into these two?
Right, and thank you for asking me about fixed income, Nisha, because it's the largest asset class for our customers.
And it's going to grow in prominence
Absolutely.
in interest rate hardening scenario.
Yeah, so we'll take it in two parts. One is the specific tax clauses on REITs, InvITs, and maybe the MLDs. Well, as far as the REITs and InvITs are concerned, there is a level playing field now.
Yes.
So just by some degree of financial innovation or financial engineering or structuring your payments to the customer or investor in a certain way, you are not better off or worse off now anymore.
Yes.
So everyone is at a level playing field, which kind of harmonizes everything, and it's good for the customer in the long run and good for the sector.
Yes.
Now, just on the pure basis of performance and merit, the investor can choose.
Yes.
Again, that aberration has been taken away. So it actually should propel the asset class, and it's a great asset class. We are only about 1 trillion rupees in market cap for all the REITs and InvITs and so on.
Yes.
We believe this asset class will grow 10x in the next 5 to 10 years. So that's the potential of this asset class. Investors should look at this asset class now very aggressively in a fixed income scenario that we are in. So that is one. MLDs is a small market. It's about 25,000-30,000 crore issuance every year. But again, it was distorting from a high net worth investment perspective the demand and supply a little bit because of the tax aberration available, which has been taken off. So what it does is that it kind of frees up the customer or the investor to look at other avenues on the fixed income and the yield side. Opens up the arena for credit funds, residential real estate funds, commercial real estate funds, infrastructure funds, and so on. So a lot of real assets which have been financed by foreign capital, maybe now domestic capital will start looking at that more actively, beginning with the ultra high net worth, and then maybe trickling down to other categories of investors. So a new category of products and solutions should now start coming up and get acceptance from domestic capital. So it's a great way forward for fixed income investors.
All right, boost to fixed income investment, and very quickly, the themes that you like after the budget impact.
So this budget is about the consumer, and this budget is about capex or investments. So as far as the consumer is concerned, obviously we talked about the all the push factors that will lead for higher consumption. Banking per se, we are very, very bullish on banking. Real estate, the cycle should continue. What we witnessed over the last 1.5 to 2 years, that cycle should continue. So bullish on real estate and auto. Auto sales are at all-time high, and a new category called EV and all of that is coming in. So that will continue.
And also changing the old vehicles.
The scrappage policy is there. So these are all propellers to the whole automobile sector. The cycle is very good. Exports may not do well, but companies that are led by domestic demand should do well.
All right.
So that is one consumption. The other is investments. So the good thing is that budget doesn't pushes corporate capex out. Right. So corporate capex continues, grows from here. Infrastructure, partly cement, chemicals, wherever this capex cycle is taking off. Very positive on those aspects as well.
All right. So capex cycle very important for the country and the infrastructure sector development as well. Now, Vineet, of course, for investment and impact investing and climate investing, how do you see the change of course with the budget impact?
Well, I think The push from the budget on multiple areas actually lay a fairly strong case for what the government thinks is the right way to look at sustainability, how to create the green infra. So I talked about the green hydrogen, which I think will see significant amount of investment in the coming times. We as investors, it's again an area which is new and emerging. So impact investors / mainstream investors both would probably jointly play a role given the size, scale, and the impact of sustainability. But I think there are some finer points that the budget actually talks about. It talks about the mangrove and the Mishti, which is mangroves and others, which need to be, which are very sensitive from a biodiversity perspective, and they really want it to be taken care of, which I think is a very positive initiative from the government and a right incentive that goes out. Amit mentioned about biogas, and I think the mention about green credits and the intention to put together a framework which will actually create conscious around the society about the value of green and why sustainability matters for us is probably going to be far-changing and is going to be may not have got the kind of attention that it deserves, but probably will be will make a significant change to the society as well.
Right.
I personally feel from an investor's perspective, we'll have to come up with new thought process and new ideas to see that we can pull in very large amount of capital. And at Aavishkaar, we have been thinking about a carbon first fund, which probably will be the first of its kind fund.
Yes.
Where we use India as a base to attract very large amount of capital to go to the poorest of poor in the remotest part of India, grow trees, and then try to trade in carbon units or green units as
and carbon credit. Some of those policies, Vineet, has to be now articulated by the government and also subsidize and help the corporate world also embark on the transition into green energy space as well. But Amit, very quickly, your list of negatives and positives from the investment view post the budget.
Yeah, no, I wouldn't say negatives, but look, I think what we've learned over the years is that the government doesn't do everything in the budget. There are things that happen outside the budget as well. And this is something now which is well established. I must commend the fact that the government has set up the Damodaran expert committee to look at how private equity can get a big fillip in this country. I mean, and I think it's particularly important at this point of time, given the global volatility in capital flows, and given the fact that the private equity industry contributes over half of our FDI. And I think if we manage to keep growing private equity and venture capital in the country, it will massively aid the agenda that the government has set up, the Saptarishi agenda in the budget. Right. So one thing that I think the government could definitely do outside the budget is take into account whatever recommendations the Damodaran committee makes and follow that up very quickly with a set of further policy actions. And if we see those, I think that will be a further set of tailwinds to what I think has been a very encouraging budget.
All right. Thank you so much, Amit, Vineet, Anshu, for joining us on this riveting conversation. Of course, early days budget still getting digested. We have to still see the impact. But these are the most important reactions coming in from the investors on the budget 2023. With that, it's a wrap. Thanks so much for tuning in.